Good morning, UPBOptionMillionaires.com. It is Monday, December 8, 2014. I'm going to be doing a live webinar at 10 a.m. Eastern Standard Time. Join me for unusual option action. Stock futures are falling here. Oh my goodness, just like they were last week at this precise time. We had the gap down on Monday. And guess what? That dip got bought, just like every other dip since the lows of March 2009. Been saying that in the chat room at OptionMillionaires.com. Every single dip. I mean, when the market was falling off a cliff, everyone was so worried. I said every single dip has been a great buy the dip opportunity. We are Pavlov's dog. And so why fight this trend? Crude oil. Every single rip since the highs has been a great sell the rip opportunity. Why fight this? Down over 1% here, looking to head back to multi-year, 5-year lows for crude oil. So that's good for the consumer. I'm going to talk like this the rest of the time. I like talking like this. Big lots. I brought this up in a lot of my videos. If you go to the blog at Option Millionaires, I talked about it this weekend. I posted some of the videos I had done on it. And I said each time it hit this long-term resistance line, we saw a nice, nasty snapback. I wrote it as one of the nicer trades to do into the end of 2014. Just like at the start of the year, I talked about it as a great trade to buy the dip. All the analysts were negative on the stock. Downgrade, downgrade, downgrade. Oh, and guess what? It gets up here. Guess what the analysts were doing? Upgrade, upgrade. Hey, 50, 55, 60. And then this happens. So it was nice to be in that trade there for a move to the downside. And I think over the next 3 to 6 months, probably going to continue down to support here. And then we can go back to this. We can just repeat and rinse, or rinse and repeat. I don't know how it works. Another stock I'm looking at, FCX. I've been talking about this one for quite a while. You can see this head and shoulders pattern did not come to fruition. Hit the neckline and bounced. Here we are back at support again. If this breaks, when the trend line breaks, FCX will fall, I think, significantly down to about 15, 10. We could be looking at a WLT or an a CLF, which would be a significant downside from current prices. So something to keep an eye on. If this support line does not hold for FCX, I think it's curtains. That's a pretty bold statement, but hey, I've made them before. Google, Barron's out this weekend talking about this stock. Heading up 20% to new record high stock price. And I've been talking about that for a while too, but guess what? It hasn't been working out. Last 3 months has been a significant swoon for Google, and I think ultimately will come down to this level before it thinks about bouncing. But guess what? Barron's has a good sway in this market, a good pull, and I think we're going to see at least a short-term bounce for Google. I'm just looking at the chart, and I thought this 550 level was key. We had to hold this to put those new all-time highs and sights in the short term. So now it's going to take a little bit longer. I do agree over the long term, this is going to be a $600, $700, $800 stock, especially if all the central banks keep printing money at record high stock prices. Who would have thought it back in 2009 that they would keep this going, this Ponzi scheme, if you really think about it. Gold is above that trend line, and I think it's going to head down into this channel, just like silver, which dropped into that channel, has been sitting there. So if you look at GLD, we could continue to see significant weakness in the name. And again, I was pointing out oil. Look at USO down 2.4% this morning. I like this support line here. I talked about this in the last couple weeks. There's a monthly chart. I think over the next 3 to 6 weeks, we're going to see a move down to this 2250. If we break that, we can see significant downside. There was a lot of pieces in Barron's this weekend talking about crude oil heading to $35 a barrel, but settling at about 60. So we'll see if that happens. That'll be nice for the consumer. Some of the names I'm looking at for continued downside, Caterpillar. I brought this up at the blog at OptionMillionaires.com. In the middle of last week, I think the $100 level is a price that Caterpillar will not pierce again for the next, 3 to 6 months. I'm looking at a move down to 95 this week. It's a pretty bold call, but if you look, we have a high, a lower high, a lower high, and we're just going to collapse here. And I think we'll find support longer term over the 90 level, and even then we can dip under 80. So something to keep an eye on there on a bearish trade. I like Facebook. From a bullish perspective, we broke out here, and I'm looking for a move back over 80. I don't care what the rest of the market does. I think Facebook is heading higher. Same with Twitter. Look at this. Hit long-term support. And I think the name is going to pop up to at least close this gap here at 50. And I've said this many times in the chat room at OptionMillionaires.com. I think this is a $100 stock over the next 6 to 9 months. That is Twitter. FedEx and 3M. FedEx heading to new record highs last week. Looks really bullish here. Continues to break out. I think at some point this will break, and we're going to see a significant move to the downside. Nothing to really worry about, but something that's going to be, significantly, I like that word, profitable if you trade for the put. So you can see the action really over the last, 12 to 16 months, it's up 100%. So that's a lot. Shipping a lot of stuff. Check their numbers. Have they been shipping 100% more product, more items over the last 12 to 18 months? Probably not. But a lot of this, and it was a chart I posted on my Twitter account, a lot of it has to do with, and it is 3M Corporation reported its earnings is up significantly. Look at these moves for a Dow Jones Industrial Average component that historically, through its entire life, has been just kind of mundane. Hi, I'm dull. Ho, ho, ho. Hey! It's kind of, look at me. I just reinvented the wheel. That's what these charts look like. And so you just trade it to the upside. But when it breaks, it's going to see a nice sharp reversal. I could see 3M over the next 3 months or so heading back to 120, 110, and at least retracing a lot of these gains. But the problem in this market is timing it. And you cannot be sitting there going short this market every single day hoping for the market to pull back, because we've seen it. The easiest trade you can do in this market is just go long or sell options that are trading, betting on a move for downside. And so one of these days it'll break. But all right, so that's 3M. Pull up a couple more charts. We have earnings this week coming out on Tuesday. We have AutoZone, another stock that's just going into the stratosphere. Back in 2009, it was under $100. You can see it consolidated here, and a lot of people thought at this level AutoZone was pretty overpriced. Yeah, give me another 65%, Alex. What do they think about me now? So AutoZone's reporting earnings. DMND, Diamond Foods, is off its lows here. This looks kind of bullish as well. Reporting earnings. We also have BBY, Pep Boys. This looks somewhat bullish here. We're at support at about the $9 level. So some calls. And Costco. A lot of people, they might not be shopping there, but they're eating the samples at Costco. Costco's new all-time record highs. Another stock that's just breaking out. It's, hey, wow, do you really think they've seen that many more customers in their store? Are they just that more profitable? But, hey, you know what? Trade the trend. And again, it's another stock that at some point is going to come pulling back. It's going to be a profitable move to the downside, but why fight it? And finally, we have Toll Brothers reporting earnings as well as Costco. This looks like it's consolidating. You know what? We could see move back over $40 here. Possibly up to 50, and you see this move we had back up before the financial crisis. Something to keep an eye on. I like this chart here. Consolidation. This would be a bull flag. We're consolidating. Move up for 50. So we'll see. I might get some calls here. Get up to about the 38.40 level. Let's take a glimpse real quick at Toll Brothers and see what those $37, $36 calls are doing. Let's get into the weeklies for Toll Brothers. 36, 15 by 30. Led 35, 40, you know what? Something I might get here. $35 calls are 45 by 65. Maybe get a 55-cent call there. That's something to look at. All right, UPBOptionMillionaires.com. Stock futures. This is crude oil. This continues to trade very weak this morning. And futures, let's look at S&P 500. Futures are down a third of a percent, almost back to the lows of the session. This is the European market open. We've still got 2.5 hours until the U.S. market's open for trade. I'm up early. I've been up the last 3 hours. I can't sleep. All right, everyone have a great trading session. See you in the chat room at optionmillionaires.com. Again, in 3 hours, I'll have that nice live webinar talking about unusual option action. It's fantastic. All right.